90% of you are gambling with your future, and you don't even know it. You saw the guy on the yacht. You heard the insider tip on Reddit. You bought the hype. And then Monday morning happened. A 20% drop. Your sure thing turned into a dumpster fire. And now you're just a bag holder while the pros walk away with your money.
Stop it!
Stop. You aren't a bad investor. You're just playing a rigged game. Individual stocks are a trap for 99% of people. But today, I'm ending the stress. I'm going to show you the lazy strategy that the actual 1% uses to build empires while they sleep. No charts, no heart palpitations, just millions. We're talking about ETFs. And by the end of this video, you'll never look at a single stock the same way again. Let's build your empire. The biggest lie we are sold is that to get rich in the market, you have to be smarter than everyone else. You think you need 6 monitors, a Bloomberg terminal, and a degree in macroeconomics. But here's a reality check. Even the pros, the hedge fund managers who get paid millions to pick stocks, fail to beat the market 90% of the time. Read that again. If the guys with the PhDs can't consistently pick winners, why on earth are we trying to do it while we're at our day jobs or eating lunch? When you pick an individual stock, let's say you put all your faith in Tesla or Nvidia, you are taking on something called concentration risk. You aren't just betting on a product, you're betting on the CEO staying sane, the supply chain not breaking, and the government not changing the rules. If one thing goes wrong, your whole portfolio goes south. That's not investing, that's gambling with a suit on. We're here to build an empire, not a casino. What's the alternative? It's called an ETF, an exchange-traded fund. Think of it like a best of album or a fruit basket. If you buy a single apple, a stock, and it's rotten, you've got no snack. But if you buy a massive fruit basket, an ETF, that contains 500 different fruits, and one apple is bad, who cares? You still have grapes, bananas, pineapples, and oranges. An ETF is a basket of stocks that you can buy with one single click. Instead of trying to guess which company will win, you simply buy the entire industry or the entire economy. When you buy an ETF that tracks the S&P 500, you are instantly becoming a part owner of the 500 biggest companies in America. You own the banks, the tech, the energy, the retail, all of it. It's the ultimate, if you can't beat 'em, join 'em strategy. Let me tell you a story about 2 friends, Active Adam and Passive Patty. Active Adam spends 2 hours every night reading earnings reports. He's always buying the dip on random tech stocks. He has some huge wins, sure, but he also has massive losses. He pays more in taxes because he's always trading, and he's constantly stressed. 10 years later, he's up 7% a year on average, but he's exhausted. Then there's Passive Patty. Patty doesn't know what an earnings report is. She just set up an automatic buy for an S&P 500 ETF. She checks her account once a year. She spends her time traveling, working on her career, and hanging out with friends. 10 years later, Patty is up 10% a year. She has more money than Adam, zero stress, and she didn't waste a single Saturday looking at charts. Be Patty. The market rewards patience and simplicity, not activity. The Big Two battle, VOO versus QQQ. Now let's get tactical. If you go to your brokerage app, you'll see thousands of ETFs. It's overwhelming, but for most beginners, there are 2 heavy hitters you need to know, VOO and QQQ. 1. The VOO, Vanguard S&P 500 ETF. This is the safe haven. It tracks the 500 largest U.S. companies. It's ultra-diversified. If the U.S. economy is doing well, VOO is doing well. It's low cost, incredibly reliable, and it's the backbone of most multi-million-dollar portfolios. It's the burger and fries of investing, classic, and it always works. 2. The QQQ, Invesco QQQ Trust. This is for people who want a bit more spice. It tracks the NASDAQ 100, which is basically the 100 biggest non-financial companies. It's very tech-heavy. Think Apple, Microsoft, Amazon. It grows faster than VOO, but it also drops harder when the market gets shaky. Which one should you pick? If you want steady and safe, go VOO. If you're young and can handle some bumps for the sake of higher growth, QQQ might be your play. Or, pro tip, you can hold both. Before you run off to buy an ETF, I have to warn you about the silent killer, fees. In the ETF world, we call this the expense ratio. Some funds charge you 1% or more just to manage the money. That might sound small, but over 30 years, that 1% fee can eat up hundreds of thousands of dollars of your profit. The ETFs I talk about, like VOO, have tiny fees, around 0.03%. That means for every $10,000 you invest, you only pay $3 a year. Always check the expense ratio. If it's high, they are stealing your future empire. Don't let them. Ready to start? Here is your 3-step lazy blueprint. Open a brokerage account. If you're in the US, use Fidelity, Vanguard, or Schwab. If you like a more modern feel, Robinhood works too. Search for the ticker. Type in VOO or VTI, total market. Set up DCA. This stands for dollar cost averaging. Don't try to time the market. Set an automatic buy for $50, $100, or $500 every single month. Rain or shine, market up or market down, you just keep buying. This is how you win. You don't need a miracle. You just need a system. Investing shouldn't be your full-time job. It should be the engine that runs in the background while you live your life. By choosing ETFs over individual stocks, you are choosing peace of mind. You are choosing a strategy that has worked for 100 years. You aren't a gambler anymore. You are an empire builder. I have a question for the community. Are you currently holding any individual stocks that are stressing you out, or are you already an ETF warrior? Tell me in the comments. I want to see how we're all diversifying. If this video helped clear the fog, give it a thumbs up and subscribe. In our next video, I'm going to show you exactly how to divide your paycheck, the 50-30-20 rule, so you know exactly how much to put into these ETFs every month. I'm Barb. Build your empire, stay safe, and I'll see you in the next one.